The inclusive financial system facilitates a whole range of efficient financial services, including credit, insurance, and payment services. Inclusive financial system is a very relevant dimension of financial development, which is important for the achievements of SDGs. Financial inclusion has become a significant issue in developing countries like Bangladesh, where the large number of people are still far from the access to basic financial services and formal financial institutions. I'm requesting to play the AV now. Thank you. I'm talking about a personality who is a social researcher, strategy consultant, associate professor at ULab, and director, Center for Enterprise and Society, and director, executive MBA program. He will enlighten the session with his expertise on financial inclusion. Please welcome Mr. Sajid Amit at the stage. Mr. Sajid Amit, please.
Thank you, everyone, for sitting through this very interesting set of discussions that have happened so far. Let me just also say how much of a pleasure it is to follow in the footsteps of a mentor of mine, Professor Imran Rahman, who was seated just here a little while ago, both of us representing ULab. But now I would like to just speak very briefly about the structure of this panel, because I've been told that there's a need to expedite things. So we'll try to sort of squeeze the panel within 45 minutes. My introduction, a very generous introduction, was just shared with you. So I'll just move on to my cue cards and invite all the esteemed panelists to the stage. First on my cue card, and this is sequential, so the first person is Mr. NASER EZAZ, CEO, Standard Chartered Bank. Mr. EZAZ is a career banker. Mr. EZAZ, can I please request you to come and take the stage? Mr. EZAZ is a career banker, having worked with Standard Chartered Bank for 25 years in diversified roles with varied complexities, which includes senior roles in corporate banking, risk, and audit. He is responsible for driving the business, ensuring robust governance and execution of strategy for SCB in Bangladesh. Next on my list is Mr. MAHTAB AHMED, Managing Director and CEO, Robi Exiata Limited. Mr. MAHTAB, if I may please request you to come and take the stage. Mr. MAHTAB is a fellow of the Cost and Management Accounts, having spent nearly 17 years in financial leadership positions, including the post of Finance Director in Unilever Pakistan, Unilever Arabia, and Unilever Bangladesh. He joined Robi in September 2010 as the Chief Financial Officer, CFO, then rising to the level of COO, and then to his present position. You've heard from him already, and so the third person on my list is Mr. MOMINUL Islam, Managing Director and CEO, IPDC Finance Limited. Momin Bhai is a truly transformational leader. He's an expert in the area of affordable home loan and supply chain finance. Under his leadership, IPDC has been a success story in introducing technology-led products for better financial inclusion, and he's also a banker whose career has spanned more than 2 decades. And last, but certainly not the least, is Ms. Tina F. JABEEN, Investment and Policy Advisor, Startup Bangladesh, ICT Ministry, Government of Bangladesh. Tina Appa, is a former senior director at PricewaterhouseCoopers, a graduate of Berkeley, and a guide and a crafter of the investment and operations guidelines, which led to the building of a very successful accelerator, an initiative that you might all know called Startup Bangladesh, and a leader in various other fields. So maybe a word or two about financial inclusion in Bangladesh especially. I mean, in Bangladesh, what tends to happen often, as all of you know, I mean, finance is close to my heart. I'm an academic and a researcher on finance, having previously been a finance practitioner, an investment banker previously, but my own career and research interests have now transitioned into financial inclusion because I feel it's very exciting. It is an area that sort of touches upon varied stakeholders. So, you know, one gets to work with, of course, banks, a very important stakeholder in financial inclusion, NBFIs, startups, fintechs, and of course, telcos, and even development sector organizations. So it's a very exciting field, and the reason why it's important is not just because, you know, so you have people who talk about the social benefits of financial inclusion, of which there are plenty, but there are, of course, business benefits. Liquidity is an issue in Bangladesh, and we will stand to gain immensely once our net is cast broad enough and wide enough so that we're able to access the savings and deposits that are currently trapped under people's mattresses. To do that, of course, we have innovations. We have innovations that stem from mobile financial services to agent banking, and increasingly we hear the buzzword fintech, and hopefully there'll be more than buzz in the coming days and years. To shed light on these issues, we have the perfect panel. We have panelists from banking, from telco, from NBFI, and of course ICT. I don't have a particular sequence in mind, but let me start with MAHTAB bhai, if that's okay with you. So for MAHTAB bhai, I guess one of the things that I've personally always thought about is when you see, to start with, you know, the basic sort of innovation we've had so far. It's not basic because it's simple. It's basic because there's, of course, a lot of work to be done to build on it. And I'm thinking of mobile financial services. I'm thinking of mobile money. I'm thinking of platforms like bKash and Nexus Pay and of Rocket that we use in our daily lives to send money. Nowadays, we just use it to send money, cash in, cash out, merchant payments, very basic functions. In different countries, we see that it's led not just by banks, as it happens in Bangladesh, but telcos as well, with interesting results. In India, for example, you have a situation in which telcos are competing with banks. It would have had interesting consequences had it happened in Bangladesh because Grameen and Robi are so big, bigger than most banks. But I suppose, MAHTAB bhai, my question is, do you foresee a future when we could have a reality in which telcos can also be driving and owning mobile financial services entities and such?
Very interesting question. Actually, in different forums, we have talked about it. To start with, why mobile companies should be allowed to be playing a very important role in MFS and DFS. The fundamental point is telecom is the only industry, only sector who has got access to 140 million people in the country. No other sector has that. Mobile is the industry who has got access to remote places. Any villages you go in the country, we have presence. So we are more connected to people than any other industry, whether you say bank, NBFI, or any other places. Even if you talk about bKash, Rocket, and all these companies, they are riding on what? They are riding on mobile infrastructure. They are riding on distribution of telecom sector. So if you consider the basic, I'm not getting into too much of details because we have very short time. There is no reason why mobile companies should not be allowed because this whole model is building on the infrastructure that we have. That is number one. Number two, why you should be happy, I think very nicely you pointed out, we are giving very basic services. Payment, cash in and cash out. Is this called financial inclusion? Or we can go way beyond? Of course we can go way beyond. But with the current infrastructure, it is not possible and no one is thinking beyond. But telcos can do it. And let me give you some example why this supply chain is so important. In India, Per transaction cost is 19 taka. Sorry, in Bangladesh. Do you know that? 19 taka. Whereas in India, it is 5 taka. So in India, it is costing 5. In Bangladesh, it is 19. Why is that? Is it because of the infrastructure, the way it has been designed, that is resulting this kind of costly mechanism of transactions. The other point is, it requires a lot of things, and I can give you a few examples. It has to be supported by analytics, very powerful analytics, and telco has that. I can tell you Ruby invested $6 million only on analytics last year. And why is that? Because we know which are the customers to be reached and how. We know how to manage the customer lifecycle management of a customer. That massive level of data that we have, which can be effectively used to bring financial inclusions. We are connected with e-commerce, we connected with online shopping, everything you name it, we are somehow connected. What I don't understand, why our policymakers, if they truly believe in financial inclusions, I don't think there is no choice but to consider mobile operators to be part of that. If we deny that, we are actually denying the progress of financial inclusions in our country. I think it's a time, you asked about the future. Future is till the time our policymakers doesn't realize that. I don't think it is going to happen. Sooner they realize, they will be doing a big favor to the country. And last but not the least, I would like to highlight on the point, is there is no conflict between bank. And I want to bring certain example of our regional companies. If you look at, talk about Sri Lanka, India, Pakistan, they all allow mobile companies. Even they are allowed to have banking licenses. But one thing, if I take the Indian example, the mobile operators' financial services don't compete with banking sector. Meaning what? For banking sector, you know how many branches Bangladesh has? 10,000 branches, 57 banks. But if you go for retailers, mobile retailers, we can have 6 lakhs retailer point all over the country. For bankers to go to 6 lakh retailers is not financially feasible for them. And agent banking and everything being done today, it is also not going to work out in my view. Only one agent bank can do what serving one bank cannot be a feasible option. Why it is not a feasible option? If I'm allowed to do 5 banks, I can reduce the cost and I can serve provide cost-effective services to customer. Currently, it is not allowed. A mobile operator can act as a master agent of only one bank. So if you look at different component of policies, is clearly isolating mobile operators who can play the far bigger role. And the final point I want to make is there's no conflict between banking sector. Banking sector can do certain level of transaction which is feasible for them. For us, say for example, 1 lakh, up to 1 lakh taka of transactions, whether it is cash in, cash out, or even deposit, microfinancing, that can be allowed, which currently not feasible for normal bank to do. So without going for any conflict, it can be easily handled.
MAHTAB, thank you. May I ask you a follow-up question?
Yeah.
Because I'm sure this debate is widely known to this particular distinguished audience about banks versus telcos, right? But just to push this thought further, like, so we are imagining a reality where, let's say, Grameen Phone and Robi can use its agents. We can use their agents to cash in, cash out, etc., right? That's huge. 2 huge entities, perhaps entities that could rival bKash overnight. And of course, with consequences to do with how telcos are currently regulated versus banks and so forth. Now, so from my vantage point, right, I mean, one of the reasons why fintechs a lot of multinational fintechs and foreign fintechs haven't necessarily entered Bangladesh yet in the way that perhaps we could have seen by now. I tend to think Bangladesh is a very fertile ground for fintechs because it's such a, density of population and so forth, and telco penetration. But having said that, right, I mean, because the transaction costs are still very high, as you pointed out. But what sort of regulatory reformulations would be required, do you think, if we had a reality where telcos and banks perhaps had joint ownership or distinct ownership of MFS businesses? What sort of regulatory reformulations could be required?
Okay, first thing I think the policymakers should ask themselves, are they happy with the current level of progress? Are they having the right policies? If they, to give an example, only one player has got market share of more than 80%. Is it the right policy? In my view, probably it is not the right policy. If there is a competitive market of MFS, there should be at least 4 or 5 big players, not only one big player. Now coming back to very specific to what are the regulatory changes needs to happen. First of all, we should make it open. Policy should encourage or should focus on one singular point, which is how can we ensure financial inclusion for unconnected people. That should be the primary objective. And then you should ask ourselves, who can do this job better? Obviously, it is telcos. Does it mean telco has to do it alone? No. Telco can do it alone, but telco can also do it along with the banks and financial institutions. Nothing wrong with that. But if you completely taken telco out of it, I don't think that primary objective can be achieved. I think that is the one fundamental regulatory changes we need to bring in. And it can only happen when banking sector, NBFI sector, microfinancing sector, and telco works together. I don't think telco alone cannot make the big difference, but all of us together can make a big difference. This realization of our policymaker can really transform the financial inclusions we're talking about. In my view, we talk about financial inclusion too casually. We don't really, either we don't understand it, or we don't sincerely want financial inclusions happens in Bangladesh. And I 100% agree with you, Bangladesh is the perfect place where financial inclusions are most relevant and can be effectively implemented here.
Thank you so much, MAHTAB. Nasir, hello. Nasir, so what I wanted to chat to you about, given your vantage point overseeing the largest multinational bank in the country, and of course, I'm sure in your position, you're seeing the advent of innovations like agent banking, and with some success, early success. I think by now, as of March, I think we had, through agent banking outlets alone, collected 1,000 crore in deposits. And I think—
More than that.
More than that? Okay. And perhaps about 20% of that was in advances, loans and advances. But we hear that it's still a few banks that are ramping up or investing in this space. We hear of Bank Asia, we hear of Dash Bangla Bank, a few of the newer banks, and increasingly Bragg Bank, I've heard. Now, from your vantage point, do you see the sector overall taking agent banking seriously over time? And what's your vision like when you look into a crystal ball and you see agent banking and its outlets proliferating, the density of agents increasing, and people increasingly going to agent points to open accounts, etc. Like, what do you see when you look into a crystal ball for Bangladesh?
Thank you. First, I don't have a crystal ball to start with. I would have done many things differently if I had it. But just to address the point, why do we need this agent banking? Because only 20% of the population has access to banking, right? I mean, that's before the agent banking came in. Therefore, predominantly, when a market uses cash more than the online transfers and others, you'll still need, means or alternate channels through which you can actually get the clients onboarded. Therefore, agent banking started a few years back. Now, I think there are 5,000 agents, about $500 million of deposit, $500 million equivalent deposits. There are 19 banks who have already started. There are 21 approvals in place. But as you said, only few are, have done meaningful progress compared to others. I think it is going to stay for a while until the mode of settlement becomes less cash. I don't think cash will go away altogether. While it's possible, but I don't think it's in a near future it will go away altogether. But as long as there is a cash element, this agent banking helps. But if you once you move out of cash, which is the preferred option, then as MAHTAB mentioned, I think the telco-led model will be much more successful in partnership with the banks. I think there is no conflict in this, and I think the days of having individual entities doing everything is gone. It has to be partnership. So we have to build our core strength and then operate and partner with others who have their other strengths, and so that we can become an exponential force to realize the potential of the country.
It's interesting. So you think that in the future we will have a more complicated, or not complicated, we'll have more complexities in ownership of DFS, MFS agencies?
Yes, but I think one of the major issues that we actually currently deal with is the financial crime control and also the cyber risk, security risk on this agent banking model. So that actually kept many of the international banks away from getting into this areas. But we have seen, we are actually, as Standard Chartered Bank, we have already started doing agent banking in Africa, but not in the developed markets. Because where there's involvement of less cash, you really don't need agent banking. It's more easier to deal with telcos and others, have partnership along with it, and fintechs. That helps a lot. Like if you think about China, we had a kind of a session there. You can buy a lemon, one single piece of lemon, without cash, because they don't accept cash anymore.
Sure.
There's a QR code and all those, right? So I think that takes away cash. And the moment you go away from the cash side, you really don't need agent banking anymore, because you already have cell phones of those individuals who are going to bank with.
I didn't plan to ask you this question, but I hope you don't mind me asking you something that I just thought of. So I was recently looking at a Financial Times graph that showed how, so that was a graph that compared different countries, sectors, banking sectors. I'm sure you've seen this graph, right? And how, right, so it had different bubbles, right? So it showed, it was basically profitability per employee and revenue per employee of the banking system in different countries. And how China has far higher profitability and revenue per employee. The Chinese banking sector does compared to India, despite India's higher population density. For obvious reasons, because I think China has more government-led digitization efforts, perhaps more wealth per capita and so forth. Now, I guess from your vantage point, once again, when you look at the banking sector in Bangladesh, its profitability per employee and its revenue per employee, of course, banking is an expensive business in Bangladesh for a whole variety of reasons. And we know automation will cut costs. We know technology-based interventions will cut costs. But what are the discussions nowadays like? Why are we so slow, I suppose, in adopting digitization and automation? Like, and what does the future hold?
I think some of the major issues that we face is about the regulatory requirements on paper-based documentation. If you think about letters of credit, you can't open letters of credit on a straight-through process because there are certain documents that you need to provide. When these regulations came, I think there was a purpose, which I think over time that purpose got replaced by other automated systems where we already submit a lot of documents online. So these archaic regulations, is something that we need to look at now. It served its purpose when it was implemented, but now I think it's time to move on and do away with those redundant controls, if I may say, and come with more automated digital approaches so that we don't really need to rely on those papers. Those papers, do you think anyone looks back? It doesn't happen. It actually wastes storage space, a lot of inefficient ways. That actually increases your cost of doing business, right?
জি আসলে আমরা ফিনটেক নিয়ে কথাবার্তা এত বলি কিন্তু আমাদের বেসিক অটোমেশনের তো অনেক জায়গা বাকি
Exactly. Like just simple thing. I mean, I'll digress a bit. Think about the powerful CIB, Credit Information Bureau, that we have. Think about the NID database that we have. If we can have a direct access so that a loan processing can be done immediately, instantaneously, right? You have data in your income tax files. You have got the smart cards. You have got CIB data. You really don't need to submit those papers to the banks, right? It can happen immediately. So artificial intelligence. We are also working on some of the blockchain technology for cross-border remittances and supply chain financing.
It's really interesting. Great. I'll come back to you, Nasser Bhai. Can I just have the mic? Hi, Tinapa. Tinapa, given that you work with various projects, women MSME financing related projects, startup related projects, and in many of these projects, financial inclusion was a cross-cutting issue, which gives you an interesting, holistic perspective. Would you tell us where you think financial inclusion stands, let's say with women MSMEs, women customers in general, how startups are doing, and maybe perhaps you could talk a bit about your work?
Thank you, Sajid. And I want to thank the Finance Summit, the organizers and the sponsors and the partners to invite Startup Bangladesh in this summit, and also all the participants and the guests here to hang out with us, still here, although we are running pretty late. So I'll be very quick with giving you some updates about what we are doing in the financial inclusion area, where, about women, women entrepreneurs specifically, and also the ICT Ministry's initiative in the startup area, and also how that is related to financial inclusion, and how the colleagues in this room from all these big banks can actually play a huge role in driving this financial inclusion initiative, which is really going to make us successful for us to gain or accomplish or achieve our Sustainable Development Goal 5, which is financial inclusion and gender equality. So just a little bit about Startup Bangladesh. First, I'll just talk about what we are doing in that area. So Startup Bangladesh is a small initiative, about 243 crore Bangladeshi taka. It's a small fund, about $34 million. And what it does is it funds, it gives idea stage seed and growth stage funds to startups who are working in different sectors of the different industries using technology. So one of the focus area is financial inclusion, fintech. So we do have a couple of startups where they are working in the fintech area. So so one of them is iFarmer. So iFarmer is a startup which does crowd funding for women farmers and male farmers, but mostly women farmers working in the livestock industry, where we do crowd financing to these women farmers and to buy livestock, and they can buy it when they're very young and kind of raise them and then sell them to the market. So that's just an example of the startups that we are funding right now. We also have women startup, women founder in a startup here in this room right now, Ramani XYZ. I don't know if Armin is still here. But what it does, it's a platform, very interesting, very innovative. What it's doing is providing beauty care services at your home. So women in this room, pay attention. You can just call somebody, a service provider for your spa services or whatnot, and I'm sure there are also services for our, male clientele. So what it's doing is it is empowering the women who are, not in the regular SME or banking industry or, more sophisticated people. They are empowering these women to provide simple services and, basically enabling them to run a business. So that's on the Startup Bangladesh side. Couple of examples of how we are funding startups who are working with fintech and also working in the area of financial inclusion. So what we do is we provide about $12,000 fund to an idea stage startup, about 1 crore BDT, which is $120,000 to a seed stage startup, and then 5 crore BDT to a growth stage startup in each multiple rounds. We also do, from Startup Bangladesh, is targeted investment. And targeted investment is funding projects which is of national interest, where we are going to develop certain services or platforms involving technology to address a specific big national need. So one of the project I'm sure you guys have heard or read in the newspaper is the BGMEA digital wallet. So I will say a few words about that a little bit later, but so that's kind of something that we also are doing with Startup Bangladesh. We also have a state-of-the-art accelerator in the ICT ministry in Agargaon, 14th floor. I would encourage you guys to visit it. I can arrange a tour for you guys if you want, but that's where some of our startups are located. You can go there, and the space is free of charge. It has conference facilities, it has training facilities, it has teleconference, video. It's free of charge to any startups. So that's on the Startup Bangladesh ICT Ministry. The other thing that I'm involved in right now is the UNCDF Women MSME Innovation Fund. It's a new initiative and started this year, and that's basically all about women financial inclusion. And in that one, what we are doing is we are basically funding women MSMEs who are working in the financial inclusion area, and this is for the ASEAN countries and SAARC countries. We just got done with the first round in June, and you will be very happy to know that 2 of the Bangladeshi startups got selected from 100 startups in all over our ASEAN and SAARC countries. So our startups are doing really well. So that's on the UNCDF area. Other than that, there are policy-wise, I'm sure there are a lot of bankers here. You guys all know that a lot of policies from the central bank and also from the ICT ministry, where we are enabling the women SMEs through different type of banking models or tools to provide them financing or provide them the other type of logistical supports that they need. So I would stop here, and then I would welcome questions if we have time for questions. Thank you.
Can I ask you a follow-up question, Tinapa? Because a panel, we might have to avoid a Q&A, or maybe just take a couple. So a follow-up question that was of interest to me, and hopefully of interest to you and the rest of the audience. I mean, we have worked together on startup-related matters. When you look at overseas, when you look at other countries, so much exciting stuff is happening in the fintech space. Like, it's hard to keep up, right? I mean, in Asian countries, in India, and so forth. Obviously, a lot of exciting stuff is happening in the startup sector in Bangladesh, and I'm very proud of it. I'm associated with many of these startups, and you're associated with far more. But from the vantage point of an educator and a researcher, I think that one of the reasons why we haven't had as much innovation in fintech in Bangladesh could be because of a certain lack of financial literacy. It's partially our fault, as we do a good enough job. I certainly don't speak of ULAB, but I'm generally speaking as the academic sector in general. We were discussing financial literacy earlier, right? So what's your view? Is that true, first of all? And do you think there's,
I think that's very true. That was my observation when I came back to Bangladesh to work in this project 3 years ago. So financial literacy in general, in the general public. So in the morning, somebody was discussing how people are, basically going broke because they were making investments in stock market, not very informed investments. They are not very savvy investors, but putting all their life savings in there. So in general, there is a shortage of financial literacy in the public. So in that one, probably, I'm sure our educational system, and not just, primary, not just university, but from the primary system, we can have some sort of a program. The other thing is, there is a heavy shortage of finance people. I know there are a lot of bankers here, but if you are going to build an economy which is based on innovative technology, innovations and whatnot, and somebody was talking about capital market, you need to have finance people who knows how to value investment startups specifically, and we don't have that. We had to do due diligence on 5 startups a few months ago, and we were struggling, and thanks to IDLC, Arif, thank you, and Startup Dhaka and BD Ventures, they helped us because we couldn't find people who actually does finance job for startups and valuations. Those guys were able to help us only because they are doing, these type of work. But again, we had to go to, 3 different people, 3 different institutions. So, one thing would be definitely not just regular financial literacy. It's also like, really having finance courses, which is focused in universities, focused on, this type of new knowledge that, we need to have in our educational system.
Sure. Absolutely agreed. Thank you, Rinapa. Momin bhai, good to see you.
Same here.
Momin bhai, as Nasir bhai was also pointing out, আমাদের দেশে আসলে a unbanked population is massive. And there are flattering figures out there, but according to this World Bank database that came out in 2018, Findex, ওখানে দেখাচ্ছিল যে including, a lot of us think that microfinance must have reached every village household. The reality is so far from the truth, right? I mean, ওখানে দেখাচ্ছিল যে even banks plus MFIs have reached less than 50%
Exactly.
of the population of Bangladesh.
Exactly.
And so yeah, I'm curious because you are leading a very dynamic organization, an NBFI that is partnering with fintech. So I wanted to understand exactly how you think NBFIs can play a role, technology-led or otherwise, in furthering financial inclusion.
Right. Thank you. So as you were saying, that is still 50% of the population of our country remains unbanked. So if you talk about this financial inclusion, it's not only banking, as we say that there are 4 components like credit, savings, payment, and insurance. That if you have. So of course, on payment landscapes, due to the mobile financial service, we have substantial improvement. On the credit side, we thought the microfinance institute, we have one of the very best microfinance industry in the world, very efficient, but still they cannot really go everywhere, and it's highly, costly compared to the formal banking or NBFI sector. So the players like the banks, NBFIs, microfinance institutes, then of course fintechs or mobile financial service or digital wallet, and of course the promise from the telco sector. Problem is everyone is working in a silo concept. Everybody wants to have it all. They want to have a model which is entirely of their own centric. So we need to have a collaborative environment. There is data, as Nasir bhai was saying, there is a platform, as MAHTAB bhai is saying, but the issue is both from the private sector players like us or from the regulatory side, how we can sit together to have an ecosystem and regulatory framework built to have a proper, cost-effective platform for the larger population of this country, not only the payment service, also the credit, savings, and insurance. That needs to be there, and also how do we manage the associated risk on the credit side, on the monetary policy, on the, say, educating the population, that needs to be taken care of. As far as IPDC is concerned, or NBFI is concerned, NBFIs always remain at the forefront of financial inclusion. If you look at the Indian model, where basically the RBI has given a mandate for commercial banks that 20% of their lending has to go to the priority sectors, which essentially is in the financial inclusion domain. There what is happening, like banks like Stanchart, which is mainly the urban-based mainstream bank, their purchasing portfolio from a small boutique NBFIs who are very efficient for any specific sector or a specific locality financing, like semi-urban housing financing or agro financing, like that. In Bangladesh, when NBFIs came into picture, that started with enormous possibilities, but unfortunately, except for only 3-4 institutions, none could really keep that promise because of the kind of regulatory framework we have. As far as IPDC is concerned, when we did our last strategic planning back in 2015, due to our shareholding, like we have government, BRAC, and Aga Khan Fund. So our core business model was essentially designed circling the financial inclusion. So we thought that, okay, it cannot be a peripheral business for us. It has to be in the very core DNA of our business process. So we selected 3 specific areas: youth, for employment creation, and then women, and then the small limited income household beside Dhaka and Chittagong in the smaller cities and suburbs, which remains largely under-addressed by the formal bank or financial sector. So what we have done for this youth, basically that's the small entrepreneurs. So there we saw that the key issue is they don't have the, say, formal accounting record, or they don't have the, say, they are not capital intensive, so they don't have the, say, collateral to offer for their credit. So we went for the supply chain financing. So collaborating with the large corporates who are essentially our customers, we are doing this work order finance, factoring finance, and distributor finance. So we are very happy to let the audience know that IPTC has built the first ever blockchain-based supply chain platform in collaboration with IBM India and supported financially by DFID, which will essentially can change the landscape for SME financing or small entrepreneur financing in Bangladesh. So this is the first ever blockchain-based integrated digital supply chain platform in entire Asia. So 2 of the banks in India started before us, but they could not successfully complete the project. We have done that. And the next stage is to really integrate the vast retailer, the micro merchant across the country to this platform. But there the current issue is how you integrate those who do not have bank account. So then you have to bring in this MFS into the picture. Then that's the Arjun platform. Next, on the women segment, we saw that women empowerment remains one of the key agenda for any financial sector player. So our product, Joy, which is for the women entrepreneur, which gives loan at 8%, which is now the lowest in the market. Then what we have done, not only for this women entrepreneur, for any financial product of IPTC, we have kept some special features for women, like borrower, a home loan borrower, if the property is registered in the name of the women in the family, they get an interest rate and processing fee discount. If a deposit is kept by a woman, there will be a interest rate premium. If a woman comes for an auto loan, they get a free driving training from BRAC driving training school. So that's the way we are trying, not only for the financial inclusion for the women segment, but for the ultimate women empowerment. And then the third was the household, say, beside the metropolitan of Dhaka and Chittagong. We saw that there is a surge of retail financing in Bangladesh, but the most of the banks and financial institutions looking at the high net worth or the high middle income families in Bangladesh. So if you just talk about this home loan, 22 banks and 6 financial institutions competing for the home loan market in Dhaka and Chittagong, which is very pricey. Our lower middle income families cannot afford a property, decent property in Dhaka or Chittagong. So this is essentially around 1.2 million families we are talking about, we are now catering. But around 14 million families who have around $400 monthly disposable family income, they remains vastly outside the financing system. So IPTC has taken this product called Bhalobasha Home Loan, where we are giving this loan to these lower middle income families across the country who are building mostly on their ancestral properties. So if we go through these smaller cities or suburbs across the country, you will see millions of unfinished houses. People start building their houses with a small savings they have. The savings get finished, they keep it like that. Then another couple of years they wait, another savings they gradually build. This is like a 10 years, 15 years gradual building process. Or people start building the house after they retire with the life savings, and by the time the house is completed, most probably he doesn't have the time to enjoy that house. Housing is very important for the upbringing of the child in the family. A decent environment is important. So we took that as a priority sector. Issue was we do not have the distribution network. We have a very limited distribution network. So BRAC being one of our key shareholders, we collaborated with BRAC that, okay, they have 2,200 distribution offices across the country, so they can sell our product. Then we went to BSRM, one of our, large corporate customers. When people are coming to buy the rod to construct their house on their ancestral property, they are offering IPDC home loan. We have gone to the cement companies, they're also offering now IPDC home loan. So we are getting tremendous response on the Bhalobasha home loan. So these are the three key products, basically in the three the key sectors we are working on, but there are many technology-led products as well that I can cover, that we are trying to really collaborate with fintechs and my MFS and digital wallet to really go for this kind of financial inclusion.
Momin bhai, thank you so much. আমি একটা ছোট্ট follow-up প্রশ্ন করতে চাই because I just got indication that we don't have a whole lot of time. So this is a quick follow-up question because I think it's interesting and I hope it'll be interesting for the audience as well. So fintech বলতে তো অনেক কিছু বোঝানো হয়. In overseas countries, we hear of cryptocurrencies, we hear of blockchain, which I learned from you, Jay, is already being piloted in Bangladesh, which is wonderful. I'll hopefully connect with you about this later. There's robo-banking, there's AI, there's so much. I mean, EBL itself has this intervention called DIA. So things are happening. Things are happening beyond the startup space, and as is the case, I mean, you need the startup, young, more, I guess, less regulated startups to innovate, and you also need your commercial banks and your NBFIs to invest in their own fintech space. Our particular area of interest has always been in digital lending, right? Now, of course, Bangladesh's prekapote digital lending korte hole, you'd need the backbone of MFS, through which you actually do cash in, cash out. What is the sort of, have you thought of, can you speak of the potential of digital lending in Bangladesh through NBFIs or banks?
Yeah, basically, for any financial inclusion, unless and until it is financially sustainable, you cannot go there. You can do a piloting or you can do like a CSR, but it will not be
cost of MFS.
Yeah, so now the question is, in case you have to go for this financial inclusion, most probably this human-led agent banking is not going to be a solution, because microfinance is there with the human-led model. So you need a digital model for savings, for lending, for insurance, or for payment. On the lending side, what we are currently doing, the retailer micro merchant financing, now we have around 1.6 million micro merchant only in FMCG. If you take the pharmaceutical industry, if you take the construction industry, it will be more than 2.3 million, okay? And only around 34% of them have bank accounts. So we are essentially talking about 66%, which is around 1.5 million. They do not have bank accounts. So if you want to go for a digital lending, you need the help of, say, mobile financial service or digital wallet. So we are currently working on that space. We have started a piloting with Unilever for their last mile to market distribution points, the Polliduts. How do we finance that? And we are trying to build the digital platform for that. We have also gone for a collaboration with Sheba XYZ, who have lots of service provider on their wallet for their any asset acquiring, like a motorbike or machine they need, or for their receivable financing. We are doing that. We are also working with, say, Bikash and iPay for the small savings scheme, say, installment collection or the installment collection. There are few say barriers to that. One on the financial side, when you go for this retailer financing, this is a very short-term financing. This is transaction-based financing. That you see that he is lifting a product of Unilever or say this brand or say Square or SCI, and you give the money to the distributor. So the product goes from distributor to retailer, and money used to come from retailer to distributor, now the bank or financial institution to retailer. So if it is FMCG, it's 7 days cycle. If it's a food sector, it's 2 days cycle. Even for pharmaceutical, it's like a 1 month cycle. So for 7 days average, if you give 1.5% processing fee for sending or receiving money, annually it is more than 100%. So that's way beyond. Like the interest rate, we are talking about like 12, 15% interest rate. So how we can afford that? So this is a kind of problem we have. On the digital lending, the regulatory side, you need a hard copy signature. The wet signature is essential now. We need to have a change in our legal framework for that. eKYC is essential. So the data is already with, say, MFS or telco. Only thing is, now we are only doing from NID. That itself is okay, but NID information is not always say correct. So we need an AI-based verification of address, which our telco partners can really provide. So this kind of collaboration, if this has to be effective, we need a regulatory framework also developed for that collaboration. But we are very, very positive on that. We are going very strong on the digital lending and digital savings landscape. Till now, we are thinking that whatever, up to what level we can go, like those people who have a smartphone, we can fetch a lot of data. So that is fine. Those people who have bank account, we can fetch a lot of data. So that's fine. And beyond that, most probably by a couple of years, we can pursue the regulators to really relax the kind of rigid regulatory framework it has. Like for AML, CFT, and few others, the KYC requirement is very robust. For even small savers, or for a small borrower, or the CIB report collection, it costs 200 taka. A person who will be taking maybe 5,000 to 10,000 taka, for him, 200 taka on the CIB report can be something very significant. So we need to work on those fronts to really have this collaboration with the fintechs possible.
Very, very helpful insights from Momin bhai and all of you. Extremely helpful. In fact, it'd be wonderful, as Imran Sir pointed out, to document some of these and ensure their widest possible dissemination. With that, I think we've come to the end of this session. Can we take a couple of questions from the audience? There's a gentleman at the second table.
Hi, so it's a question for MAHTAB sir over there. My name is Yusuf and I work at the RAZ. Right, so now the beauty of this country is that, like, you know, we are a mobile-first nation. Same thing for, say, China, Vietnam. I mean, my chauffeur, he was introduced to the internet via his phone, not his desktop. He doesn't even have one. So now, why, I mean, although the majority of the population is mobile-first, why did 4G actually fail, relatively fail, and why is data still not cheap enough for the mass market here in Bangladesh?
This is, I'm not sure it's relevant to this audience today of financial inclusion. But since you have asked me these questions about data price, let me give you some facts and that you would understand and why these telcos are cribbing, why one is making profit and others not making profit. ITU has done an exercise for BTRC a year back or so. The per GB or per MB price, cost price should be 26 paisa. Currently, we are selling at 4 paisa. So this is the reality. And if you do a global benchmark, we are among the bottom 5 in terms of data price. So if this price continues, I can tell you most of these telcos will be bankrupt because currently we are surviving because of voice price. So one has to understand the current prices, our consumers are extremely privileged to have that kind of low price. It's not sustainable for this industry.
Thank you, MAHTAB bhai, for taking a question that wasn't completely within the purview of this topic. At any rate, can we get another question from the audience? Just one more. Okay, so we'll just close the session here. Thank you. Thank you to all of you, NASER bhai, MAHTAB bhai, Tina Appa, and Momin bhai for a wonderful session. Can we get a big hand for the panelists?
Thank you very much, honorable panelists. I'm now requesting Mr. Arif Khan, Managing Director, IDLC, to please come on the stage to hand over crest to our panelists and the moderator. Mr. Arif Khan, please.